October 28, 2025. Global markets are split, and here's why you should care. Wall Street just hit record highs. S&P 500, Nasdaq, Dow, all green, all euphoric. But as Asia opened, the party ended. Major indices from Tokyo to Sydney turned red. Why the divide? It's not earnings or economic collapse. It's politics. A high-stakes meeting in Tokyo between two unpredictable leaders is casting a shadow over Asia. US investors are riding momentum, but Asia is pausing, taking profits, and bracing for surprises. This isn't a minor blip, it's a real test of global conviction. When Wall Street soars, Asia usually follows. Not today. The region is risk-off, cautious, and waiting for clarity. Let's break down what's driving this global split. The headline: President Trump has touched down in Tokyo, making headlines across the globe as he embarks on a high-stakes diplomatic visit. He's here to meet Japan's new Prime Minister, Takaichi, who just took office and is already facing her first major international challenge. For Takaichi, this is a defining moment. Her leadership and diplomatic skills are under the microscope, while Trump's reputation for unpredictability has global markets on edge. The stakes couldn't be higher. Trade negotiations, regional security, and the ever-present shadow of China's growing influence are all up for discussion. Investors worldwide are watching nervously. Uncertainty is the enemy of the markets, and this meeting is packed with unknowns. Just yesterday, Trump was welcomed by Emperor Naruhito in a display of tradition and ceremony. But today, the focus shifts sharply to business and policy. Will the leaders announce a breakthrough trade deal? Or will tensions flare over defense spending and military cooperation? In this digital age, even a single tweet from Trump could send currency markets into a tailspin, with investors reacting in real time. Across Asia, traders are holding their breath. Many are selling first and waiting for clarity, as Takaichi's diplomatic playbook remains a mystery to the world. Trump's America First approach has always added a layer of tension to international talks, and today is no exception. The outcome of these talks could either strengthen the US-Japan alliance or introduce new strains into a partnership that anchors the region. For now, Asian investors are playing it safe, waiting for any sign of clarity before making their next move. This isn't just another diplomatic event. It's a moment that could move markets, shift alliances, and set the tone for the region's future. The region's caution is visible in every index, as Asia waits to see what the next chapter in US-Japan relations will bring. Japan's markets were on a roll. Investors had been riding a wave of optimism, with stocks surging to levels not seen in decades. The energy on the trading floor was palpable, as traders and analysts watched the numbers climb higher day after day. The Nikkei 225 soared to record highs, capturing the world's attention and fueling hopes of a sustained bull run in Asia's second-largest economy. But as the Trump-Takaichi summit approached, uncertainty crept in. The rally that had seemed unstoppable suddenly lost momentum, with traders growing increasingly cautious about what the high-stakes meeting might mean for global markets. At the opening bell, the Nikkei dropped 0.57%. Although it managed to recover some ground as the session wore on, the index remained in negative territory, reflecting a clear shift in sentiment. The broader Topix index fared even worse, tumbling further and signaling that the caution wasn't limited to a handful of stocks. It was market-wide, affecting nearly every sector. This isn't just about exporters or tech giants. Investors across the board are taking chips off the table, reassessing their positions, and bracing for potential volatility. Portfolio managers are seizing the opportunity to lock in recent gains, shifting their strategies to reduce risk and protect client assets ahead of what could be a turbulent news cycle. It's a textbook case of profit-taking, but this time it's driven by political anxiety rather than economic fundamentals. The looming summit has injected a dose of uncertainty that's hard to ignore. Even in the midst of a strong bull market, geopolitics can flip sentiment on a dime. Headlines from abroad can send shockwaves through Tokyo's trading floors in an instant. The fundamentals of Japan's economy may be solid, but today, it's the fear of the unknown that's dictating every move. Investors are wary of surprises that could upend their strategies. The summit has become a sentiment killer. Trading activity has slowed, and most buyers are sitting on the sidelines, waiting for clarity before making their next move. The message from Tokyo is clear. Protect your winnings, stay cautious, and wait for the dust to settle before jumping back in. This is what a market on edge looks like. Nervous glances, tense conversations, and a collective pause as everyone waits for the next headline. The pullback isn't panic, it's a smart defensive move. A reminder that in times of uncertainty, protecting gains is just as important as chasing them. The jitters spread beyond Japan. South Korea's KOSPI plunged as much as 1.4%, with both large and small caps selling off. Korea's economy relies on global trade. Any US-Japan shift is a direct threat. Investors are nervous, caught between two giants. Australia's ASX 200 also dipped, reflecting the region's risk-off mood. Even with its commodity buffer, Australia can't ignore Asia's slowdown. The Trump-Takaichi meeting is a regional event with global impact. No market is an island. Caution in Tokyo and Seoul infects Sydney. Investors are reducing exposure across the Asia-Pacific. The synchronized downturn shows just how serious the stakes are. Hong Kong's Hang Seng looked like it might buck the trend. Futures pointed higher. But don't be fooled. The market is torn between regional politics and China's domestic news. US-Japan tensions could hurt, but hopes for Chinese stimulus or a tech rally offer support. The Hang Seng is caught in a tug-of-war risk-off from geopolitics, risk-on from tech and China. Unlike Tokyo or Seoul, Hong Kong's direction is less clear. Traders are split, making it a volatile, unpredictable market. The city's unique position means it reacts to both regional and mainland headlines. On a day like today, that means extra caution. Meanwhile, Wall Street is in full celebration mode. The energy on the trading floor is electric, with traders cheering and confetti flying as the market continues its historic run. The S&P 500, Nasdaq, and Dow have all shattered previous records, each index climbing to new heights. Tech stocks in particular have been the driving force, pushing the market higher day after day. For the first time ever, the S&P closed above 6,800, a milestone that seemed out of reach just months ago. Analysts are pointing to this breakout as a sign of growing investor confidence. The Nasdaq has soared to unprecedented levels, powered by a surge in chipmakers like Nvidia and a wave of optimism around artificial intelligence. Investors are betting big on the future of technology. But it's not just about tech. The Dow's impressive gains show that this rally is broad-based, with industrials and healthcare stocks also posting strong performances. The market's strength is spreading across sectors. US investors are laser-focused on robust corporate earnings. While headlines from Tokyo swirl, Wall Street is tuning out the noise and zeroing in on the numbers that matter most. All eyes are now on the upcoming big tech earnings reports and the Federal Reserve's next policy decision. These events could set the tone for the next phase of the rally. Optimism is running high. Investors are buoyed by strong profits, a supportive monetary policy environment, and renewed hopes for progress on a US-China trade deal. There's a sense that the stars are aligning for continued growth. For Wall Street, international headlines, like Japan's summit, are little more than background noise. The focus remains squarely on domestic growth and opportunity. The US narrative is all about growth, innovation, and the relentless pursuit of new frontiers in business and technology. That's the spirit fueling the bulls, the belief that the best is yet to come, and that the rally still has room to run. The disconnect with Asia comes down to focus. Two markets, two mindsets, each chasing its own story. But for now, Wall Street's is all about momentum and optimism. Why is Asia so cautious while the US is euphoric? Proximity. For Tokyo, Seoul, and Hong Kong, the Trump-Takaichi meeting is a local storm, not a distant headline. New tariffs or alliances could hit their bottom lines overnight. US investors, insulated by geography and a strong domestic market, can afford to look past it. Asian economies depend on exports and stable trade. Any shift in US-Japan relations is a direct risk. The US market is driven by internal strength. Asia is weighed down by regional uncertainty. It's a classic divergence. Local risk trumps global optimism. Investors in Asia are protecting capital, not chasing gains. The lesson: understand the local story before you invest. Today proves that proximity to risk shapes market psychology. Even as Tokyo dominates headlines, investors are watching what's next. Big tech earnings in the US could make or break the rally. Will the giants deliver or disappoint? The Fed's interest rate decision is looming. Every word will be scrutinized for clues. Will rates stay steady, or is a cut coming? And don't forget China. Any trade breakthrough or breakdown will shake global markets. The Trump-Takaichi meeting is just the start of a packed week. Markets are juggling multiple narratives: politics, profits, and policy. The winners will be those who keep up with every twist. Stay alert. The next headline could change everything. This is a high-stakes, fast-moving market. Here's the bottom line. Wall Street and Asia are playing different games. The US is on offense, riding tech, strong earnings, and Fed support. Asia is on defense, cautious, risk-averse, waiting for clarity from Tokyo. This isn't about who's right. It's about different priorities and risks. Proximity matters. What's distant noise in New York is a crisis in Tokyo. Global investing demands nuance. One size doesn't fit all. Today, Asia's caution outweighs Wall Street's optimism. Watch these stories. Will US bullishness pull Asia up, or will Asian anxiety be a warning? For now, the disconnect is the story. One market celebrates, the other hesitates. That's the game. Don't forget it.